Good evening, traders. Welcome to the Sunday Open. I'm your host, Craig Shapiro, macro strategist here at NinjaTrader Live. It is Sunday, July 5th. Happy 4th of July to everybody. A huge 250-year celebration all weekend. There's also Taylor Swift and Travis Kelce's wedding on Friday. That might have been an even bigger event, according to my wife and several other folks who are big Swifties. Brazil just lost to Norway, or is in the process of losing. They're down 2-0 in extra time. And so we're here for the Sunday Open, though. It was a big day on Friday after a weak Thursday. And so the prices are kind of going to be a little bit all over the place here. But NASDAQ is back up to 29,948, which is up 10 basis points from the Friday close, but up 350 handles from where we were on Thursday at the close after a massive reversal in Korea on Friday. We'll get into that a little bit more. The Russell opening a little bit weaker. Where else is going on? Gold, 41.88. Gold had a big move on Friday, higher after the weaker Thursday into Friday. I'm sure I'll confuse this all day here, but after the weaker than expected non-farm payroll on Thursday, gold was up and then had another big day on Friday. Bonds are soft. The dollar is flattish. It's going to be an interesting week. Plenty to get to. Let me bring in the panel. Sarah checking in from Southwest Florida, Pax from undisclosed location in the Midwest, and Farm from his new home in Arizona. How's everybody doing on this fine holiday weekend?
Great to see you.
Awesome. We're actually up north at the cabin. On Thursday, I was freezing. It was like 40, and now it's like 83. And I didn't put AC in because it's going to be like a once or twice a year thing. I thought it'd be funny if I was like dabbing my forehead with like a G-string pair of underwear. But my wife said, absolutely not, Farm. All your underwear are dirty. So I'm not going to do that.
God.
You didn't see that one coming, did you? Did you, Pax? You didn't see it coming.
Could you imagine?
No, I didn't see it coming, and I don't want to imagine it either.
I said Farm did it.
Holy shit!
I would have never thought about that.
Thanks,
Farm.
Either.
You're welcome. Yeah.
Yeah, I don't even know how you move on from the show going forward from that. But if you're here and you're new and you like the content, make sure to like the channel and subscribe and ask us questions in the chat. We're going to go through major market movers and kind of get you prepared for the week across all the asset classes and go through the calendar and what's coming ahead and be done in time to get you ready for England versus Mexico this evening at 8:00. That'll be after we do the crypto closeout at 7 p.m. with Follis, and I'll be joining him for the first 15 minutes, and he's got a great guest after that. So we got 2 hours with you, and then you can get back to your soccer or football or whatever the hell you call it. But let's start with the outlook for the week here, Sarah. How are you thinking about the equity outlook? Last week was a wild week. Kind of started the week strong, kind of ended the week poorly. And then Friday, half day, futures are open, up day. Where are we? What are we thinking about here?
So we did have some nice volatility as far as being stuck inside this big range. We had, good up moves early in the week and then, some nice down moves at the end of the week. But ultimately, we closed ES and NQ. What you're looking at is the weekly charts. We closed inside weeks last week. So that's kind of perfect because like we said, we're see this gray box on the charts. This is the range that we're stuck in. So we are just in here and we're going to chop around in there until we can get out of there. So we've got inside weeks. They're starting green. So full time frame. Well, what's the month? Full time frame continuity, not here yet. We've got ES on the month is green, NQ is red on the month for RTY, green. So very mixed bag, and all, like I said, ES and NQ are still stuck inside this big range with RTY and YM being stronger as they made new highs last week. Now they did not stay above them, but they made new highs. So it's okay. We're going to talk about the line in the sand, which is very important this week. because, well, farm knows the strat pretty well. So we were talking before stream, and I said, what do you think? You think we get 2 ups or 3s? And him and I both are, bears at heart. So we both want 3s. So what does that mean? What is a 3? Well, in the strat, there's only 3 candle types, a 1, a 2, and a 3. A 1 is an inside bar, a 3 is an outside bar or an engulfing bar, and a 2 is directional. So the thing about 2s is they can break and become a 3. So what is likely to happen, and this is the level here, we're going to make this big. The level I really want you guys to pay attention to this week is last week's highs. So what is this? 75.94, we're going to say. So if you are above that, you can be bullish, and we can try to make new all-time highs this week. Shit. I'm going to screw it all up too with the holiday. So if you're above this orange line, or 75.94, you can be long. But if we start trading, so say tomorrow we go above this level, and then Tuesday we break Monday's low and start coming back in, that's how outside bars happen. And an outside bar, like I mentioned, is an engulfing candle where this current candle takes out the previous week's high and low. And that is what you can kind of almost expect to happen when you're in a tightening range like this. You can expect breakouts to fail and kind of go the other way. And farm, you'll hear him say all the time, it's more, and this is for the same for us too, it's more bullish if we break support and then start reclaiming the previous range. Like, we want to see that thing happen. Like, we want to see people get stopped out and then go. And that's kind of our whole thing, is stop you guys out and then we go. So that's kind of what I'm going to be watching most of the week, is can we get above last week's highs? If we can't, I don't want anything to do with this chart. If we cannot get above last week's highs and we stay stuck in this range, there's no way I'm going to trade. Not futures, at least. I'll go find something else that's moving, because this is not moving. So if it's not moving, I would just say don't trade it. But the line in the sand for ES and NQ is identical. I know I'm talking a lot about ES, and I know everybody loves to trade NQ, but it's the same exact thing. Everything I'm saying stands, except that level for NQ is 30,600. NQ is a lot weaker and has been a lot weaker. As you notice, the month is red. So again, Qs are weaker. So same thing. I want to get outside of last week's range. And if I can't, I really don't want anything to do with it. But the levels in the sand are last week's highs and lows. And let's play devil's advocate. Let's say we break to the downside and then start reclaiming the range and go to the upside at the end of the week. That could happen too. It's just, are you above last week's highs or below last week's highs? Are you staying there? If you're staying above last week's highs, you can be long. If you're below, you can stay short. But if you start reclaiming, we're going to go outside week. So that's what I want to see. So we want outside weeks. I don't really care if they're up or down. I just want the range to start getting bigger inside this tightening range, if that makes sense.
Yeah. And it seemed like we have had rotations out of tech, at least to start this quarter. The Russell and the Dow looking better. So we have those divergences, right? Right now we're not right.
Yep. They're definitely stronger and trending. ES and NQ have been trading sideways for over a month now. So yeah.
Yep. Pax, new quarter. We closed the June quarter very strong. There was talk of this, massive pension rebalance for sale in equities at the quarter end, which didn't hit in the quarter end, but it seemed to hit maybe on Wednesday into Thursday. What for you are you looking at here? What are some of the new levels, your pivot levels here as we transition into the third quarter?
The S&P is completely uninteresting to me. The NASDAQ is a much better trade. And I'm uncomfortable saying that. I don't want to start thinking about trading the NASDAQ again, but the NASDAQ is by far and away the better trade. 30,263 in the NASDAQ is the quarterly pivot. 30,263. So as long as we're below that, I want to be short. Quarterly pivot in the S&P is 7508. And we're 50 handles above it, 44 handles, 46 handles above it. You know, a couple weeks ago when we had Samantha Leduc, you know, she said about crude, there are better things to trade. And right now, I think there are better things to trade than trading the S&P. NASDAQ, one of them. Even the 30-year bonds are a great trade. And gold is a phenomenal trade lately. So, you know, I don't know. I want to see I like when the NASDAQ leads. I think everybody does. So I want to see the two start to, I want to see S&P start to weaken underneath 7508. If that's the case, I'll get short as long as we're above it. I'm thinking about it from the long side, although that is sort of a bearish reopen on the weekly with the high of 75.6875. You know, we hit that high and we bounced off of it pretty quickly, even more bearish than the NASDAQ. What was the high? It was 979 and a half. Yeah, 979 and a half. So, you know, I mean, it's these ranges are big. We have really, really big ranges with not a whole lot of volume in it. So the fact that these ranges are big and, you know, I don't know if this is even worth me saying, but, you know, in the NASDAQ, I was a big enough trader to be able, Crudele's going to bust my balls, I know, but I was a big enough trader to be able to move the NASDAQ when I had positions on and it was thin. So I noticed,
Humble brag.
Well, it was in the pit. It was, and when I was a lot younger, I'm a market taker, not a market maker anymore. And then we were market makers. But, you know, I know what it feels like and I know what it looks like when you know, the entities now, the HFTs and their algorithms are pushing the market around wherever they want to. You know, and these algos, remember, we have to always remember, keep in mind that by the time we see something on the DOMs, or you see it on the charts, some of you who trade on charts, it's history, it's past. So these algorithms are making trades at the speed of, you know, picoseconds, however fast that is. I can't even comprehend that kind of speed. You know, for ticks, and then sometimes points. So when there's no bids, they can push them. They can push the NASDAQ down 100 points as we saw in the open. You know, the S&P down 10, whatever. But the NASDAQ has got much bigger ranges and they're cleaner. And then when when the selling kind of stops, the buy programs kick in and we rally back 100 points. You know, we you know, just looking at a chart from Friday's trade it shows that very little volume and big gigantic ass moves to the upside. Okay, well, you know, I mean, it is what it is. Anybody trading on Friday, I think, is crazy. But, you know, I want to trade when there's volume. So I don't know. I want to see how the week sets up. You know, it is, again, it's kind of a bearish open to the NASDAQ and a little bit to the S&P. We're down 14 points from the high. But I want to see how it sets up. Gold and bonds we'll talk about when we get to them. They're much better trades and much more interesting. So, by the way, what's going to win? What's going to win? Will it be NASDAQ weakness and bond weakness? Or is it going to be the S&P strength? What's going to happen? I don't know. It's anybody's guess. You're better off taking a pair of dice and rolling it against the wall in the neighborhood I grew up in and hope that somebody doesn't shoot you when you crap out.
Yeah. You know, we talk a lot on the morning program about the various flows that are keeping the S&P, you know, more pinned than not, and that the action is under the hood or in a variety of the other subsectors. If you could just look over my table here, you can really kind of see what I'm talking about here. Yes, you know, just to look at the month to date, though, you know, like you mentioned, Pat, I mean, month to date, you know, it's only 2 days, but the S&P is, you know, 27 basis points. But look at the dispersion, right? Semis down 9.7%, XLK down 5.3%, Qs are down 3.25%. Home builders down 2.6%. And then on the plus side, gold miners up 4%. XLF, which is banks, up 4%. Software, which had been the dog for the first half of the year, up 3.25%. XLV, healthcare, 3%. So you can see, we mentioned that earlier, the Russell and the Dow relatively outperforming, right? So you have these dispersion going on where the S&P every day you walk in, plus or minus pin to whatever the zero data expiry crowd wants to do. Then there's some idiosyncratic story in some sector somewhere that determines what goes up, what goes down. For the last few days, there's been issues in some of the upstream AI CapEx names. And so we've gotten massive selling that's exacerbated by the leverage ETF rebalance flows to the downside. But because the S&P is pinned, you basically have to slow that capital has to go somewhere else. And so it's going into other sectors. People are calling this kind of a broadening out, a firming, a rotation. That's a strength. We'll see. I mean, I don't know if it's a rotation into strength. I do know it's a rotation for sure. And until we get the outflows from a massively deteriorating labor market, the S&P is probably going to kind of continue to doing what it's doing here. And then to your point, will it be the case that the NASDAQ weakness starts to take down other sectors, or can the other sectors kind of bring up back up the NASDAQ because the economy is robust? I mean, we'll see. We get some data this week, kind of a quiet macro week. ISM services on Monday, and then the Fed minutes are on Wednesday. All eyes really are on next week, July 14th, is the CPI at 8:30, which will really determine whether or not the odds for a July and or September rate hike need to move higher or lower. And then Warsh also speaks again to Congress on the 14th. So, market and its bank earnings on the 14th. So that's 10 days away. Mark it on your calendar for next, whatever that is, next Tuesday or Wednesday. But this week,
said bank earnings next week?
Next week, all on the 14th. JP Morgan, Bank of America,
okay.
Same day as CPI, same day as Warsh. So that's your, that'll be a big day for sure. But you could definitely see it here, this dispersion that's been going on. And, we've seen time and again when the dispersion trades get very, very stretched, and then there's another trigger somewhere else in the world, like dollar yen, for instance. And so we'll keep, been talking about how strong the yen, dollar yen has been. Well, Wednesday into Thursday was a bit of a reversal. If that continues, we could start to see some of the unwind of these dispersion trades. We'll talk about that throughout the course of the week as well. But wanted to flip over here to Farm. Farm, how are you thinking about the setup here? Differences between minis and NASDAQ, and kind of what's your outlook for the week ahead?
I mean, where do we start? I mean, I think the only thing I'd add to what you said is that, I mean, the tape feels really, really unhealthy at times. And there's a fine line between healthy rotation and like extreme levels of dispersion, which I see as not being healthy. But it doesn't necessarily matter or need to matter soon. I'm a nerd and like a high-level autist here, so I had to nickname this buy program because, I mean, it really is. When this buy program's on, there's nothing you're doing about it. Like, you can't stand in front of it. There's nothing you can do. And then when it turns off, I mean, NQ is just, it's dead. Completely bidless, very thin, trades gross. So I, of course, have nicknamed this buy program Cerberus, the three-headed dog that guards the gates to hell. And it sits right under about Cerberus, the three-headed dog. Mythology, way back in the day. Cerberus. Look him up.
I don't know.
He's sitting. I made a picture for my room on this chart. He sits right below 29,269. I mean, look at how ridiculous this is. Just crazy support here. Almost kind of looks like those stops are begging to be run. Sarah talked about a possible 3. I mean, that would be one way to do it, was to take all those lows and run it back up. That might be fun. But this 29,923, like right where it's at, I'm using 923 to 969 is a big spot. Again, the same profiles from last week. I've got a leg up from year-to-date low. This consolidation up here off to the left, that's broadly healthy and reasonable to consider this consolidation for a move higher and just a correction in time. I think that's reasonable. This 29.9 spot is sort of a very, very key inflection point in this second profile off to the right, which is a leg down from the top, which at times has looked a bit distributive. So we were open, and we did open in like the biggest spot in the market to me right now, within this range. Anyways, within this range we've been trading, which is now an 8+ week range. So that's why I led with NQ. I'll flip over to ES real quick on that same chart, big picture. It's all about this 8+ week range, which way that breaks. The move is not going to be small if a break of this range sustains. And while we are inside this range, I generally see this 29.9s area as being sort of the key inflection point, 29,269, 30,269. But actually, I mean, PAX has his pivot right up about there. And so I'll flip over to ES because it's just real quick on that one, but same type of idea. So last week, I was using 74.97 to 75.18 as sort of a big picture range. PAX says 75.08. And according to the laws of the ancient order of the Furu, I have gone with 75.09, not 8, totally different level. This one's my level. That one's just PAX's level, and they are in no way related. But it's huge, big spot. Friday's low. You can see this low volume node on this profile to the right and the profile to the left. It's a big inflection spot. So to me, if we're offering, let's just say Thursday's low, I guess it was, that's going to be a problem. And as long as we're holding broadly above, call it 75.08, 75.09, it's reasonably constructive. So we have this structural conflict here between NQ and ES, where to me, NQ is, as of now, just below sort of my key area of interest within this range, NES is above. So that does create that structural conflict. Like Pac said, you'd like to see NQ lead. So at this point, you'd either like to see ES catch down and go with NQ, or you'd like to see NQ strengthen and lead back to the upside and take ES with it. So I think this spot is going to play a key role this entire week. This to me is a big short if we cannot reclaim this 923 to 969 spot. And I would be cautious up all the way up into this 30,069 to 30,100. I think if we're firm above there, then you're coming back up to the PAX quarterly pivot. I think you said was around 30,290 or so. I've got 269 to 293, which is basically Thursday's high. You can see we sold the hell off that. So those are the big spots there coming back to the upside. I think if this fails, you're most likely coming back down to 29,569 to 595. I am a little bit mindful of some spots in between, 740 to 769, and then I've got a few daily levels in between as well. But broadly, this is a huge short to me if this fails. And it was a nasty open. We'll see if there's any kind of follow through at all. But like same thing, like they could reclaim this tonight, and then we'll see what cash has to say, right? We've seen them sell the hell out of this thing on a cash hours basis and then just float it up, in the end of the day or overnight or what have you. So I'm just trying to keep a square mental state, certainly for these overnight sessions, especially the Asia session. Holy cow, they've been wild. Back down at the lows, mentioned that 29,269 to 29,328 spot has just been like perma bid, just absolutely insane. And so I would just love to take these lows first and then come back in range. So that to me would be a fantastic long for the week. And I think you're coming all the way back up to this 923 spot where it's sitting. And I do think if we broadly fail this spot up here, there's a fair chance that we're coming all the way back down. So flipping over to ES, again, kind of a different picture. Let me zoom in just a little bit here. I'm using this 75.66 to 69 as sort of the first spot order area of interest for this week. You can see last week's value area high is up there, and basically every excursion above has ended up being distributive. So that's ultimately what's going to need to bid to get ES back to the top of its range. 75.98 to 76.04 is absolutely massive as well. As long as we're sustaining above 75.09 to 15, I'm using. So I kind of split up my spot from last week just a little bit differently into that and 74.90 to 93. This is sort of your decision area, right? So as long as this is holding, I'm generally long biased. And I do think if we're generally selling pops below there, then maybe ES is going to play that catch down. And there's a fair chance that we're coming back to last week's low. And I've got a couple of spots in there you can screenshot. This 74.72 to 76 is a spot that I think could set just a little bit of a trap. I mean, this tape has been really, really trappy at times, but it has offered some amazing trades on both sides. You just have to zoom out here and just realize we're in a big, massive 8+ week range. And the nice thing about that, so, Sarah, with the strat, like they hate this, right? They want to see continuation follow through. They hate this. I'm kind of a sick bastard, and I love it. I absolutely love this because the thing is, but what she says is 100% correct, right? And most traders should not trade this, or they should look for a trending market because most traders are trend traders. They need follow through. They like follow through. If that's your style of trading, don't trade this or keep it small. But for me, like on NQ, again, we've got this 8+ week range. It's like, I don't know, a couple thousand handles, right? it's a 1,000 handle move in like 3 hours. And there have been many of those 1,000 handle moves in a few hours. So if you can pick your spots and pick your reversals and hang on, you can make, while somebody else is trying to swing through this range, which to be clear, Sarah's not advocating at all. That's the last thing you want to do is try to pick a bias and then just hold on to it. But if you're trying to do that, you're just getting chopped up probably or decayed if you're holding options. But if you're willing to flip and trade this both sides, you can pick off some amazing trades. So for me, I love it, but you just absolutely have to be willing to flip your bias on a dime. So that's kind of the big picture on ES and NQ. Yeah. It's just a big balance. You must be willing to trade this both ways or you're going to be in trouble.
Mm-hmm.
Very good point.
Yeah. There's been obviously times when, over the course of the last, several months we're on this show where we've had to, we've focused on a particular area of markets to help give a sense of kind of how the action might happen, over the course of the day or coming week. And a few months ago, we were talking about precious metals, every week, the gold and silver moves hyperbolic to the upside, and then the corrections we had. Then we were talking about the war and oil and the Strait of Hormuz and whatnot, and what that impact had on cross asset correlations and what was going to happen. Farm, are you keeping yourself up at night now watching Kospi in order to get an indication of how the trading may look as we turn in the for real-time hours? You're on the West Coast there. You got a couple extra hours of watching Kospi while we're sleeping. Is it useful? Is it top of mind, or is that overplayed?
We're going to have to bring back the quote. What? I don't even know if I remember it. It was when it was the precious metals trade. Was Kospi. I was like, oh, you think you're trading precious metals, but you're actually trading the Kospi. You think you're trading Kospi. Whatever it was, I don't know. It was absolute gold. I don't even remember it, but it's the same idea here. I mean, we are absolutely trading the Kospi, which is probably like we're probably trading dollar yen, actually.
Right.
So you bring that up and maybe we'll go there. But I talked about that on Thursday, and my eyes are very much on dollar yen as well. I've been waiting for this moment. And I'm very curious to see how this goes, because something big is going to happen either direction with the dollar yen here, and I want to be there for it.
Yeah, the dollar strength has certainly been top of mind. I kind of pointed that out last week, the momentum there, and then on Thursday with the little weaker than expected non-farm payroll, we saw some retracement, some yen weakness. Some dollar weakness versus yen, some yen strength, but it really was not much to write home about. And as we start today, dollar a little bit stronger against the yen. I don't know which one of my cats just knocked something over in the background there. I'm not sure if you heard that, but you're right. I think the dollar story here is going to be interesting to to kind of figure out in the coming days and weeks, and whether or not that's the big driver for sure. But 27 minutes in, and I want to transition, Sarah, to gold, because the charts on gold had been looking poor to end the quarter. First day of the quarter, nothing to write home about. Last couple of days, after a weaker than expected non-farm payroll report, some strength. You kind of add on a little bit of dollar weakness, and then Friday, big up move in gold. What are you seeing here in the precious metal charts to kind of kick off the third quarter?
Yeah, so last quarter we kind of had more of a bearish bias because of the quarterly candle and the color of it. And we were saying at the end of last month that gold wasn't going to flip around couldn't really flip around until we get a new quarter. This is the new quarter. So you can see that if they're going to start buying the dip, they have to kind of do it on a new quarter. And that's what's happening, right? So we got a new quarterly candle. I don't know much about the internals of how, the big money works, but probably on a quarterly basis, if I had to guess. So we're kind of seeing that buying starting. And if you go to a weekly chart, they ended last week as a hammer, and they're trying to kind of come back up through this range. So we would like to see them stay green and stay buying. And as long as we're above last week's highs on gold, you can be long. So above 40, excuse me, above 41.57, which they are. And we can start kind of gunning through these levels. And then if we get to this pink level, that's last month's highs. And we're going to start kicking shorts out of their position, because if you look on a monthly basis, they've been selling it for one, sort of selling like more of a inside doji, but 2, 3, 4. So there's been more selling pressure for 4 months. And now again, with the new quarter, new month, they're starting to buy it. So we want to join that team. And if you look at this being a low and this being a new low, potentially we could go back up to all-time highs starting on this move here from the weekly candle. Then it can trickle up to the monthly candle and trigger that. And then it can trigger up to the quarterly, trigger the quarter and get us up to new highs. So the way that, price action works is the lower time frames kind of trigger the higher time frames. So if it's gonna go, it's gonna start, like I just said, with the week, and then they're gonna trigger the month, and then they're gonna trigger the quarter, and that's just what we want to see. So long above 41.57. Not too sure I want to be short below it. So kind of only just looking for longs in this area. And silver is literally the exact same way. Same setup, basically. Last quarter, they tried to sell it off. They didn't really go anywhere. They did sell it down for kind of a few months, but now, again, new quarter, new month, same setup. We've got a weekly hammer in force right now. So silver, you can be long above 62.58. And the same thing, right? So if we get up here, we're going to trigger previous quarter's highs and we're going to start taking shorts out. And then that's the quarterly trigger. And then we can get back up to new all-time highs. So it's got to start somewhere. And it's looking like they're trying to start it here on the new quarterly flip.
Yeah. Pax, we had Larry Williams on the program last week doing an hour interview with Jimmy. Great content. He had a ton of great charts. Everyone should go back and really watch the replay of that. But he looks a lot at seasonals, and I think he was even looking at kind of a very constructive outlook here for gold, possibly making new highs into the beginning of the fourth quarter. So I'm curious, how are you thinking about gold here to start the quarter?
We're long gold. The quarterly pivot is 40.78. Well, at least the pivot until Augie expires. 40.78, and we got above that last week. And then 4100 has been that pivotal level that I've been talking about for the last few months. And we also got above that, took that out. Confirmation above 41.39. So now we're going back up to 43.25. Once we clear 43.25, then we will see 44.90. 90, just call it 44.90, and then 44.47, then 44.90. Yeah, 44.47, then 44.90, and then above that it's up to 45.91 awfully quick. And that I mean, it's gold. Gold's been an interesting trade too. I thought that if it could stay below 4100, just because it's been so gold is so bearish underneath the 200-day moving average, and that was the old moving average. That was the old 200-day, which is now 44.20 or something, that we took out back in. Oh my God, I got to look at a chart now. I can't remember it. Usually I remember these things. Oh my God, we took it out June 5th, 44.24. And underneath there, I thought that was underneath 44.24. We were very bearish. And then 4100 was that line in the sand that needed a hold. Then we had expiration, and that was I don't know, a few weeks ago. That gave us a new QP at 40.78. So I am long above that. Our group is long above that, and we're staying long above that. If we take out 4100, 40.78, then we're going to trade back down to that level I've been talking about for the last 2 months, the last 2 weeks, 39.83. Underneath 39.83, then we break to 37.75, then eventually 35. But the market looks strong. So I don't know. Are we seeing the tech unwind? Are we seeing the rotations that we're talking about? Dollar yen's starting to get everybody nervous again. So gold, pouring money back into the safe havens. Who knows? It sure seems it sure seems. Also, another thing too is that, remember, gold was selling off as crude was rallying because Tracy and you guys would talk about it in the morning a lot. Central banks were selling off their gold reserves in order to cover increased energy costs. Now that energy costs are coming back down a little bit, is gold a buy again? There's a whole lot of different reasons, I think, for gold to go higher. The fact is that it is going higher. I'm long, and I want to be more long. I want to be longer. But, alas, I'm not. I am long.
Yeah. Blake had a good flag from a couple of weeks ago, and he talked about the daily sentiment index in precious metals, broadly speaking, being pretty muted. And so sentiment has really been in the toilet for precious metals for quite some time. So you kind of got washed out sentiment, a cleansing of positioning into quarter end, maybe some new capital to start the quarter. And then you get one fundamental data point, like a weaker than expected non-farm payroll report, which takes out some of the heat off the interest rate hiking cycle from the Fed. And then all of a sudden you get, kind of 1 + 1 + 1 = 10 and get a nice bounce here off crude. I think it will need to see continued deterioration of the economic data in the U.S. and a gradual removal of the interest rate hike expectations. So we'll have to keep an eye on tomorrow morning's services ISM number to see how services have held up in the second quarter, despite the war stuff. And then I think the minutes, we talked about that a little bit pre-show, minutes this time around could be interesting because we'll get a little bit more color around the dispersion of views at the Fed and whether or not the momentum towards that hiking cycle is a little bit stronger than not. The other thing we have this week is we have a 3-year auction on Tuesday, a 10-year auction on Wednesday, and a 30-year auction on Thursday. So a lot of bond supply this week. I forget if I mentioned earlier, from a supply perspective also, we have Hynix, the Korean name, is doing their NASDAQ listing and raising $29 billion. That'll start trading on Friday. So there'll be some supply coming from them as well. So you're right. I think, the cross-asset correlation's rising. You don't necessarily know why gold is moving. Could be some one of these other factors that are helping to drive it, but when things aren't moving in that direction, there's a bias here. So we'll see. Farm, are you looking at all at precious metals?
Gold definitely has my interest. Like PAX, I would love to be longer, but alas, I'm not. And also, I'd like to be longer gold. I've got the miners that I mentioned. I got long about a week and a half ago on the miners. And I think it's time to add some direct long exposure on gold, probably. I haven't updated these levels, and I see no reason to do so. They've worked very nicely. I would like to see gold take out this 42.38 weekly high from the trailing week and make some headway back into these prior 2 weeks, which ended up being pretty nasty. I did just add the 43.25 PAX level because that does sit on a pretty key spot on these two profiles to the left. I think that's going to be a big spot there. But I do like this low. And I like the way that it's acting. I mentioned, Wednesday. It seemed like gold, it had been acting poorly when it should have acted well for a long time. And it seems like maybe it's starting to act well when it probably has reason to act poorly. And that was when the dollar was strengthening before, obviously, the non-farm payroll, which, who cares about anything non-farm? I get that. But even before that, gold was acting kind of well. And so I like it here. I pay attention when I see those kinds of things. When something should be acting poorly, it's acting well. Kind of makes me want to be long. When something is acting poorly and it should act well, kind of makes me want to be short, or at least not be long. So I like it. It may or may not be ready to just rip through these highs just yet. If it needs to charge up a little bit, something like this 41.17, 41.22, I think that would be okay. But even coming back down to what was, Thursday, 8:30 for the data, right? I think that would be okay. But I would like to see, ideally, we're going to need time and volume above this 41.60, 41.69 range to really make a run for that prior week high. And then, like Sarah said, you just walk up the time frames with these candles, right? See what a daily candle moving higher can do to your weekly candle structure, and then what a weekly candle moving higher can do to your monthly, and then all of a sudden things turn around very quickly, or can turn around very quickly on this. So definitely watching gold. I'm comfortably long with the miners, not long enough according to my wife, but I would like to add some direct exposure to gold as well.
There it was. Yeah. Waiting for that one to come in.
Well, we're about 2/3 of the way through the Sunday Open in chat. Make sure to shoot some questions our way if you want us to hit anything, and make sure you're hitting that like button for us. Greatly appreciate it. But from the Thursday close, we got Nasdaq's up 409 handles to 29,967. S&P's up 50 basis points to 75.66. The Russell is lagging, only up 29 bips to 30.22.8. Thankfully, go ahead.
Can I jump in, Craig, and say something? Tom was asking me, or not necessarily. Yeah, he did ask me, I guess, about the 10-year. So just to be clear, you guys, I'm not trading the yield, and I don't trade 10-year very much, but I do trade 30-year. You remember that the levels that I give out, when the bonds are selling off, that means, just to be clear, that means that rates are going higher. When the bonds are being bought, that means rates are going lower. So they trade inverse. So if anybody is reading anything about the levels that I was posting earlier about the 10-year, just keep in mind that that's the case, okay? Because it can get kind of confusing unless you're used to it.
Yeah. Are you seeing it? I'm curious, Pax, on the long bond. I mean, there was some weakness on Thursday, despite the weaker than expected non-farm figure, and then even again on Friday, again some weakness. I'm curious, what are the keys here for you, levels wise? I mean, we've kind of just been in this, we're kind of stepping back. We've been in this kind of a broad range. It doesn't seem like we want to break out. It doesn't seem like we want to break down. But where does it get interesting for you?
Well, it's getting interesting now, and I wish I was short. I've been bearish bonds for a long time, and the fact that they sold off, they sold off 2 points on Tuesday or Wednesday. They sold off 2 full points on the 30th. We made a high of and stopped in a really beautiful spot too. 114.20, 114.14 was Tuesday's high, and they sold off 2 full points. That is a huge move, and they're extending it. The low the other day was 112.05. So 112.05, 112.07 is going to be a huge area of support, and it has been. If you just go and draw a horizontal line on a daily chart, you can see it's a nice, I wouldn't say pivotal. It's a nice area of support. The pivot is going to be up. The quarterly pivot in the 30-year is up at 113.27. So when we took that out, I didn't have the bandwidth when I was in Michigan to be able to sell it. But when we were trading at 113, when we took that out on Thursday, that was the obvious short. And then, when I talk about this and I show it on the Friday show, one of the reasons I like trading the bonds so much is that it's easier to get the edge. Meaning, for me, the edge is being able to sell the offer. Why is that the edge? Because you can scratch the trade, and a scratch is as good as a profitable trade. So if I sell 113.27s and they go offered, I have the edge. All I've got to do is put a scratch stop in, put my feet up, and as the Commodore saying, it's easy like Sunday morning. Stay out of the way of the market. Let me take you to where it's going. And this is the 30-year is weak. The 10-year is too, but the 30-year is weak. And I think that is, who the hell? I was laying in bed last night and I couldn't sleep because I'm thinking in my mind, who in God's name wants to own duration? Who wants to tie 30-year bonds up, in an uncertain world with all kinds of crazy shit going on? So I don't know. We're in a cyclical bear market, and that rally or that break off the highs of last week is concerning. Now underneath. So enough of that. Underneath 112.05, then we're going to see back down to like 111. We have a new support line forming at 111.20. So underneath 111.20 with confirmation underneath 111.11 takes us down to last month's low or May's low at 109.16. So pay attention because it's interesting. So again, capital flows. I'll let Craig talk about it in a smarter way, but from a trading standpoint, what is going to win? In a smarter way. in like more of a CNBC or a fun way. Fun way. I sound like a dumb pit trader from Chicago.
I love it.
But it's like I'm not going to sit around and talk with a bunch. Yeah, I would. I really don't give a shit how I sound. The only thing I need to do is continue to wire money into my trading from my trading accounts into my bank accounts. So the point though that I was going to make is that what's going to win? Is it going to be bond weakness, gold, NASDAQ weakness, S&P strength? How's this going to play out? I have no idea, but it sure as shit looks awfully concerning to me. We've got crude back into more normalized levels in the 68 range, in the 6 handle. And as long as crude's got a 6 handle on it, then inflation comes down. But what does this mean for the inflation trade? Why are the bonds still selling off? Is there something lurking that we're not seeing, and where energy is now being discounted? I don't know. This shit is interesting, man. It's very interesting.
Yeah, those lows last week corresponded pretty well with kind of 5% on 30 years, kind of right at the figure there. So I think supply is definitely an issue. The deficit spending globally is elevated and continues to be elevated. And that's not just in the US, it's in Japan, it's in Europe, it's in China. JGB yields have moved materially higher alongside the dollar yen strength. Yen weakness is at a 40-year lows for dollar yen. So and the other thing we have is we have the supply coming from the AI trade, right? The increased capex is being debt financed, now to some degree equity financed too, which pressures duration. And so despite the fact that oil, and I want to flip to oil next with Sarah, but despite the fact that oil has moved back materially lower to levels below what we saw kind of pre-war, the long end remains sticky, right? And so you have this kind of services inflation remaining elevated, but all this bond supply is keeping the long end weak and keeping yields more elevated than not. Term premiums are elevated, which is just the extra compensation that folks desire for owning more duration. And so with all the volatility, geopolitical, inflation volatility, just regular political volatility going on, investors are commanding more return to procure and lock up their money for longer periods of time. So I think that's evincing itself in a broadly weak long end of bond markets globally, not just in the U.S. but in Japan and in Europe as well. So, but let's flip to oil. Oil has been something we've been talking about at the top of every show for weeks upon end, and the Strait of Hormuz. I'm sure all of us would like to forget that place even exists. But Sarah, what are you thinking here on oil? Fundamentals have been sluggish, technicals have been sluggish, positioning is sluggish, and the charts don't look great. So, but as we saw with gold, things can pivot quickly. What's the outlook here?
The charts don't look great. One of the things I don't like to hear, because it looks great if you're a short trader. So last month short, the double inside month broke to the downside, stayed below the monthly short, which is, again, your line in the sand, what I'm always talking about. And still, so if you go to the quarter, we did get a new quarterly candle with everything else, and they are trying to go inside quarter and down. That level, guys, for oil is, just call it 68.5. It's actually 68.56. But if we can stay below that, we're trying to get back down here to the lows of 55.
Oh shit!
Pax, you remember that was our bottom?
Oh, I fucked that trade up so bad. Oh, I'm sorry. I screwed that trade up so bad. That was the best buy. I bought gold in pretty valuable spots, and I've traded gold exceedingly well. I completely threw that trade right out the window. Yeah.
Well, we can't catch everything, but our analysis was right. That was the low, and then we rallied for months, but now it's coming back in. So line in the sand for oil, 68.5, short below it. Again, trying to get to 55.
We can.
How much is that? What is that? That is like a 20% move, and it's got the quarter to do it. So it's got pretty much 3 full months to do it. Boy, so can easily happen.
I'd like to get another bite at that apple and hope that I wouldn't say that. I would never hope that a war would kick off, but I can't believe and thanks for reminding me of that trade. That makes
when it was a great level.
I'm curious. When Samantha LeDuc was on a couple weeks ago, she mentioned this earlier, Pax, just kind of just oil like not being that interesting to trade. Sarah, is is this an interesting place to deploy capital in either direction here based on what you're seeing, or is it just kind of there's better things to do with your time?
I mean, it's a good short right now, as long as, like I said, as long as you're below this level. But again, you are subject to all the headline risk and all the Strait of Hormuz nonsense. So you have to be mindful of that. I mean, maybe you trade it with options where your risk is capped or something, because, gaps can murder you if you're trading, not options.
Yeah. At least you're on the side of the president on this one. He's desirous of lower oil prices and has helped to kind of keep them suppressed to the extent that he can with tough talk. And but we'll see. Farm, any desires here to do anything on the oil market?
I really didn't want to look at it, but I did. I'm kind of with Samantha. I just don't have a whole lot of interest. If obviously I would be short if I were trading it, and there's no reason not to hold a short as long as volume continues to build lower. I'd say those kind of mid 69s, like 69.26 to 48, roughly. You could work against that spot to the short side for this week, as long as that remains offered. Then to me, this downtrend continues. And you can look for last week's low and continuation lower. I do have a couple of decent spots, 65, 69, 66, 69. I don't care to just randomly buy a spot though at all. I would be short until we see buyers at least reclaim some kind of an LBN from this active trend. So, but not a whole lot of interest for me.
Yeah. From a cross asset macro perspective, I would say despite the kind of strength in the U.S. economy, and how supportive the AI capex build out has been, to see oil, as weak as it's been, I think is a concerning data point. I don't know exactly what to make of it, but and clearly a lot of this has to do with
concerning to what, Craig?
To the macroeconomic outlook. If the economy was as robust as advertised, you would have thought oil would have been stronger throughout this period to some degree. I mean, we've taken a lot of barrels out of the market because of the Strait. Clearly, inventory drawdown has helped, but the fact that oil has really retraced most of, if not all of the move from the geopolitical concern, I think begs the question about is demand strength, is the economy as robust as we think? I don't know. It's just it's something to,
Isn't that what isn't that kind of what, it's kind of the point that I was hinting at in regards to the bonds and the notes. Isn't that, I mean, yeah, I think so.
No, I agree. It's a data point that I think we have to keep an eye on the next few weeks and months here. Yeah. Is the economic momentum in the U.S. as robust as we think, or is this bifurcated story where the wealthy are doing incredibly well, more people are not, and the AI story is sucking up all the resources, but the rest of the economy is struggling? Lower oil prices would be more confirming to that data point, which is that the economy is not as robust. So we'll see what happens here. But last look at the tape before we transition over to the crypto closeout at the top of the hour with Follis and myself. I'll be there for 15 minutes, and then we have Credible Crypto joining him as a special guest later on in that episode. But pretty risk on flavor to start the week here, with the NASDAQ up 406 handles, 1.37% from Thursday's close to 29,962. S&P 75.66. The Russell lagging a touch here, only 3,022. Gold a bit better bid, 41.99. Oil, as I mentioned, is weaker, 68.22. The bonds are basically flat-ish. The dollar is flattish as well. We'll have to keep an eye on that dollar strength as we move through the week. And then last but not least, I'm going to say it, Sarah. The Bitcoin. The Bitcoin. The Bitcoin. It's trying. It's giving the old college try here. I mean, thinking there's probably been some unwind of folks who were, long Bitcoin or long crypto broadly, who have gotten out of that trade and kind of been chasing the AI story names. And so as some of the AI names have fallen back by the wayside, maybe some capital can find its way back into crypto. I don't know. Talk to Follis about that as well. And then the dollar, a little bit weaker to start the quarter after the non-farm number gets you a little bit of a bid in crypto and in Bitcoin. I don't know. What are you seeing here? It's trying.
What I can tell you is that they are buying this quarter, this month, and this week after stopping everybody out. So if anybody had bought long at the beginning of June, has gotten out now, and they're buying that kind of dip. And we get a new weekly candle starting in an hour. So this actually is like the perfect time to do the crypto closeout show. That's probably why they did it. Because you get a new, I don't know exactly, but you get a new weekly candle in an hour. So what you're setting up for is basically this for this week. They're trying to rally back through this range, and they're trying to take out 67 to 64. After that, I don't know what they're trying to do, because we've kind of got mother bar problems that could keep expanding like the following week. We'll have to see it. Next week is next week. I can't worry about next week right now, but they could. From what it looks like right now, they're trying to go outside month, but baby steps. We have to get up there first and then see what happens. But yes, right now they are buying it. Does this mean they're going to buy it forever? No, I still want this 49 level taken out. So maybe they do something like up, back down, and then like that. That would be really cool. Then we could all buy this dip and become crypto billionaires.
Like the president.
I love that laugh.
Yeah. So yeah, it's a long for now.
Crawl before we
Short
walk.
term.
Crawl before we walk before we run. Is that?
That's right.
Yeah. Pax, any thoughts here on the Bitcoin?
I own the Bitcoin. I'd like to own more if we make it to 50. I don't want anything. And I'll pitch it, by the way, underneath Sarah's line at 49. I don't want to add to it until we're either above 71,000 or we're down to 50, around 50. I'm not gonna try. I'm not looking for a shorter term swing in Bitcoin. I'm looking for a longer term trade in Bitcoin. I'd like to buy some XRP, some other crypto, but I'm going to stay away from the Bitcoin for a bit. Bitcoin, that's funny.
This is a market where trades 24/7, not futures, but just the cash markets trade 24/7. But some people don't feel like it's a legitimate market, but from a futures market perspective, liquidity and bid ask, you feel like it's
legit.
This is legit, right?
Who gives a shit? Sure. If you're trading oil, do you expect to get a barrel of oil delivered to your house? Who cares? Trade it, make money. Yeah. I don't care if they sold.
I was going to say this is actually the cleanest because it's the least fucked with, right? Luke Gromen calls Bitcoin the last functioning fire alarm, right? Because it's an asset class that just it's always open, can't be fucked with. It's definitely amidst a generally constructive risk on environment that folks have felt over the course of certainly year to date, but even over the last couple of years, and things that have done well when the president supports them. This has been a grotesque outlier. And so it is interesting here. And, as we transition into midterm season and, what Trump needs to get done, some more support for, Bitcoin and crypto and the crypto donor class, maybe around on the horizon here. I don't know. Farm, any last thoughts here on the Bitcoin?
On the Bitcoin, it's interesting. I don't look at it very often, but I looked at it, and it's kind of sitting at this last spot of demand that I had on my chart. I actually have 57.5 on my chart. It was my stop when I took a long on it in 2024. I took that long at like 59.60 up to 100 and paper handed it and missed that last 20,000. Oh gosh, I can't get over that. I'll never recover. This is a very interesting spot to me. This 57.5 and just below. And so far it's finding support here. So I'm definitely going to have to start watching it. I had preferred to be long Hyperliquid, up from like 20s, 26, I think, along to, 69, of course. But now I might look at the butt coin now that everybody hates it. It's going to zero and all the FUD's going to come out. right? Like just when everything's just getting ready to turn around, we just need some more FUD to come out about how horrible a piece of shit asset it is. It's probably time to get long around then. So I'm definitely interested. I'm paying attention. It very much could go a lot lower. This kind of spot here, or we start talking to me 49,000. But if this, finds its feet here, I might be willing to work against this spot.
Yeah, makes sense. All right. Well, last thought here. I'd be remiss if I didn't mention it. What are the predictions for tomorrow night, USA versus Belgium, now that the president has our star striker back in the starting lineup? Pax, are we taking this one home tomorrow night? What do you think?
USA by 1.
Nice. There's a Kalshi line for that. I'm sure Shai's got parlays going.
No.
Money line, goal scorer, 3-way action parlay on Kalshi. She's already warming up her bets for that. So we'll have to see what that looks like in the morning. But thanks, guys. It was another great show. Really appreciate it. Enjoy family time this evening. And now let's kick it over to Follis for the crypto closeout. Let's get cracking.
Hey Craig, how you doing?
Hey man, how's it going?
Not too bad, not too bad. Are you all caught up on the World Cup excitement?
I am I'm caught up. I see Norway has taken it from Brazil, which is I guess quite the shocker. I should know this, but I don't. What's your where your background is where? What's your where what
I'm Irish, so we're not good enough to qualify.
Well, so this, and are you pulling what's the team to pull for then?
I was actually supporting in a very weird way. I was supporting Cape Verde because
that's not a weird way. What an incredible game yesterday.
But there was actually an Irish fella playing in the back line for them, playing center back. So he was born in Ireland to
I didn't know that.
Cabo Verde dad or something like that.
Yeah. Wow. What an excitement. And, the refs really helped Messi kind of get that one across the finish line. But what an epic game. Yeah, it's been fun. I don't necessarily watch a ton of soccer, but it's hard not to get wrapped up into it now. And with the U.S. actually finally, playing some good football, tomorrow night should be fun. So we'll see.
And with your 250-year 4th of July celebrations, exciting time to be in the U.S.
It's a lot of USA, a lot of red, white, and blue, a lot of country feels going on here, and almost got the new highs for new stock market highs at the 4th of July for Trump. He is ringing the bell on Tuesday morning from the Oval Office. He's going to ring the New York Stock Exchange and NASDAQ bell to kick off the launch of the Trump savings accounts, which are for children to go right into the equity market, not into the crypto market, unfortunately, which is where he made over $1.5 or close to $1.5 billion in crypto in 2025. So it seems like he got all the profits in 2025 and no one else got any profits.
Yeah, and some kind of crazy trade frequency as well. I can't remember exactly how much it was, but it averaged out at, it was like, was it something close to 20 or 30 trades a day? It was, the guy was someone on his team is doing a lot of trading.
Oh yeah. And I know that person doesn't communicate with the president at all, because that wouldn't be right. But pretty good timing and pretty fortuitous outlook. But it is interesting because I wonder, how does the president, I know this is maybe it's a little off topic, but it is the crypto closeout, but is it putting a positive spin on the industry, a negative spin, no spin on folks' desires to be part of investing in crypto when there's the president is making a ton of money trading it or being involved in it? Is that putting an allure on the industry, or is that a red flag?
Yeah, so I was actually hoping you would ask that question, because there are definitely two sides to that coin, and I think we saw a definite flip. There was a pre-Trump token presidency and a post-Trump token presidency, and I think, like, if you look back at the chart, it's the easiest story possible to to decipher. You look at where BTC was in 2024 in the lead up to the elections. You look at that kind of range bound price action. I think we had a range from like May until October, something like that. It was just bouncing around between kind of 60K and 70K. And then once it looked like Trump was going to win the election, we saw this huge breakout because finally we had, I mean, you compare that to previous cycles where it was like, the topic of the day was, is this thing going to be regulated out of existence, right? Is this thing going to exist in 2 or 3 years' time? From that to, okay, this is actually a focal point of certain parts of the presidential election. This is something that the Dems and the Republicans are actually actively talking about in order to appeal to their voter base. So it came a long way. And we saw this massive, the Trump pump, and BTC was new all-time high, and it was just sending, everything looked really good. We got that mini alt season in November into December. I mean, I remember thinking, okay, this is it. Like, this is going to make 2021 look like, a test run. This is going to be the major influx of capital, the major influx of liquidity. This is what we've all been waiting for. A crypto-friendly administration, a TradFi bull market. The stage is set. And I remember then when Trump launched his own meme coin in January, a good friend of mine who works with quite a big asset manager in the States, he told me that they had basically exited their crypto positions. They had exposure to crypto, and once Trump launched his meme coin, he said that's the top of the market. Maybe you don't realize, but that's the top of the market, and they kind of got out. I remember thinking that was probably a little bit premature. I mean, he did, to be fair, he kind of missed. There was a little bit more to the market after that, but it kind of that was basically the start of this kind of, I don't know, late stage cycle indicator is the word that comes to mind, or the term that comes to mind. It really was the start of this kind of extraction. We had several max grift metas. We had the celebrity onboarding meta. We had this sovereign nation meta where we had like Central African Republic launch their own token. We had like the Argentinian president launched Libra token, and I know guys who got taken out of that for millions. So it was kind of, I don't want to say the beginning of the end, because that's kind of a little bit reductive and a little bit simplistic of a viewpoint. But I think that was the turning point, at least among kind of my peers and my community, in terms of looking at Trump as this net positive for crypto to maybe transitioning into something that wasn't so clear. I'll put it that way. I'll be diplomatic about this, right? But I mean, yeah, you try and explain it to people who aren't in the industry. I try to explain this to my mom or like a friend of mine who has no knowledge of crypto. I'm like, yeah, man, like the president of the United States, like he launched a meme coin, and it went to however many hundreds of millions of dollars. And then it basically slow rogued over the next 12, 18 months. And now it's worth effectively nothing, right? Or, it's minus 90 something percent from its all time high. And the majority of people who interacted with it lost a ton of money. So it's an interesting one for sure. I think for sure there's been a transition from the start of his presidency to now.
Yeah. It's not unlike other kind of boom bust, cycles in the past, not only just in crypto, but in other areas where capital flows in and, sketchy figures come in towards the top to raise money on more speculative projects. And, those things don't necessarily work out. And then everybody gets flushed and the last guy out, last guy in is, left holding the bag. But you definitely saw that in the crypto cycle right back in whatever it was, 2021 with the NFTs and the like. And so maybe we're just kind of going through that again. But how long do we have to wait to cleanse out the bad positioning, the charlatans, the bad ideas in this space, and start to kind of rebuild and from the ground up? Are we close? Do we need more of a capitulation sell? Do we need, we kind of got a little bit of that last week, right? I know a couple weeks ago when I was on, we talked about Michael Saylor and strategy, and they did change the strategy to some degree last week. Some people think that they need to be really tested and Bitcoin needs to kind of go to a price that makes it uncomfortable for them. But they did kind of do some things to maybe not allow it to happen. But are we waiting for some sort of capitulation point, or is this more like a slowly keep bleeding out, keep grinding, keep moving through, and eventually rebuild it with diamond hands?
Yeah, I mean, it's a great question, and I think the the key issue there is it's not necessarily price capitulation. It's not necessarily we need to see these sharp, spiky moves down that are going to liquidate a ton of market participants. It's more like a time capitulation thing, right? We see it in previous cycles. It's like bear markets usually bottom on this kind of slow, boring, methodical, like non-constructive price action where people just kind of lose interest, right? They kind of say, all right, crypto's a scam, it was a failed experiment, everything's going to zero. People leave the industry, they go trade stocks, they go trade precious metals, whatever it is. And they leave crypto, they leave the market. And that's kind of, you mentioned like, do we need a flush or like is this kind of a cycle that needs a flush to get rid of the bad actors? I think we're seeing that, right? We're seeing this capitulation now. We're seeing people like rotate into precious metals because gold and silver had a crazy run end of last year, start of this year. We saw people transition into or rotate into stocks, particularly tech stocks and AI stocks over the last 6, 7, 8 months. So we are seeing that, right? Now, as to whether or not like it's over, whether or not it's the bottom is in or whether or not it happens in 6 months, that's kind of anyone's guess, right? And there are various theories you can put forward to support kind of a multiplicity of arguments. But I will say this is that bear markets serve a function in crypto, and you kind of hit the nail on the head there. When you reach these levels of froth where you have like sovereign nations launching their own meme tokens, right? You have the most powerful man in the world, or at least someone on his team launching a meme token, right? That's kind of peak froth. In 2021, we saw it as well. We saw guys selling internet JPEGs for, however many 8 figures, 10 million, $20 million, whatever it was, right? I mean, these things are late stage cycle indicators. They're kind of top indicators. And after you get something like that, it does require some kind of a rebalancing, right? And I kind of use that word rebalancing a little bit loosely. You need the bear market to flush out the as you say, the bad entries, the bad faith actors, the guys who have come into this space maybe with maybe with bad intentions, with kind of more extractive intentions, and eventually those guys will migrate away from the space as the market reaches this point of like boringness, like nothing's happening. This is a terrible industry, is the wrong market to be in. And that's kind of the point at which you need to start paying attention. And this is a point that I've been making like nonstop over the last like 6 months, basically since it was effectively confirmed that we were in this high time frame downtrend, like since October last year. It's like the best time to be paying attention, the best time to be sitting up and paying attention to crypto is when it's boring, is when it's like down from all-time highs, when people are leaving the industry, when people are calling the industry a scam and saying there's nothing interesting happening in crypto. Because realistically, like that's the most asymmetric opportunity. If you only start sitting forward and paying attention to crypto when it's already done its 5x or 10x or 15x move off the lows, you're gonna, as you say, you're gonna end up holding the bag for someone else. You're gonna end up being late to the party, which is why, like, we can look at this bear market and we can say, oh, BTC is minus 50% from the October high. Like altcoins are down 80, 90%. There's a lot of doom and gloom in the industry, people leaving it for other markets. But actually, like, that is something inside me that is really like just sees the opportunity there and gets very excited about that whole idea. Because to me, that signals that we're closer to a bottom than we are to the top.
Yeah. Is there a still, would you say, a level of excitement for new projects, new technologies, new coins, new things? Entrepreneurs are still kind of excited about the future for, not just Bitcoin, but for different parts of the crypto industry? Or is there, general still, we got a lot of work to do from existing projects and prior projects that still need to work? What's the lay of the land there?
Yes and no. I mean, we've seen plenty of good projects over the last few months that they've launched and they've kind of died because there just isn't enough capital, there isn't enough liquidity. Like I think of, there's just been so many like decentralized exchanges or Web3 businesses, like cool ideas that just never got off the ground because there just isn't enough capital, there isn't enough volume being traded, there aren't enough market participants with disposable income kind of adding to this market. But then, on the other hand, we saw Ansem launched his meme coin, whatever it was, like a week or 10 days ago. And that thing's already at, I don't know what it is, like 250 million or something. I checked it yesterday. So, I mean, there is definitely an appetite there. and there are like a core of people that just haven't lost interest in the market. But I think it's one of those things, you know, the best catalyst of all is higher prices, right? The best catalyst of all is a big green candle, right?
Yeah.
So it's one of those things where like it almost becomes a self-fulfilling prophecy once the upside establishes itself, and we are still in a downtrend. Like we were in a high time frame downtrend since October, and nothing has changed about that. We're still putting in lower highs, lower lows. We're still trending down. You know, any 10-year-old can tell you, can look at the BTC chart and tell you that. But I think that, you know, once that changes, yeah, I think it's going to be pretty quick. I think we're going to see capital inflows. I think we're going to see a lot of new market participants. And like the last 4 or 5 cycles, we're going to see excitement return to the space again.
Yeah. And if that's commensurate with a liquidity pump for whatever reason, interest rate cuts or some other, you know, deficit spending, then that's how you get your cycles, right? That's how you get your positive price action. So
the AI tech stock rotation, I'm telling you, it's going to happen.
yeah, makes sense. All right, man. It's good catching up with you. Really appreciate it. Always a pleasure.
Always a pleasure, Craig. Take it easy and enjoy the rest of the World Cup.
Thanks. You too, buddy.
All right, guys. I think we are just about to bring on the very special guest for this week's crypto closeout. And I think he is here. We have none other than the man himself, Credible Crypto. Credible, are you here?
Yeah, can you hear me?
Yeah, I can. Absolutely, buddy. How you doing?
Good. How about yourself?
Yeah, I'm doing absolutely great. Happy, I know it's a day late, but happy 4th of July.
Thank you.
The 250-year celebration. I was just talking to Craig there. I know there's a lot of excitement in the US at the moment with the World Cup as well. So yeah, it's cool.
Yeah, definitely. It's pretty crazy out here in a good way.
I bet. So I guess like if we could just kick off the stream, maybe you can tell people for the 3 people on the stream who maybe don't know who you are, maybe you can give a little bit of a background about yourself and tell us a little bit about your journey into crypto so far.
Yeah, sure. So I got involved in the space in 2017. And it's a funny story because prior to this, I'd been hearing about Bitcoin since probably 2013, 2014. And I had buddies who were mining it back when it was under a couple $100s. And they would tell me about it. And I just kind of brushed it off and ignored it. And I remember people talking to me about it when it hit $1,000. And again, I just kind of brushed it off and ignored it. And then in 2017, we had a family barbecue, and one of my cousins came up to me and started chatting with me. And she knows that at that point I was into investing in the stock market. So she knew that, and she asked me if I had any investments in Bitcoin. And I told her, no, like I'm pretty sure that thing is a scam. And just like a few months earlier, I had talked to a close friend's little brother about investing, and he had mentioned Bitcoin. And at that time, it was at, I think, a little over 1,000. And I told him the same thing. I said, I'm pretty sure it's like a scam. I've been hearing about it, but I wouldn't risk it. I said, it's gone up so much already. If you're buying it now, you're probably going to be exit liquidity. I wouldn't bother with that. Go with something in the stock market that has good fundamentals, you know, that actually makes money. And so she brought it up to me in 2017 at this family barbecue. This was a few months after I talked to my best friend's little brother. And I told her the same thing. And then I was like, you know, just curious, what price is it at? And she was like, oh, it's at like 3,000. And I was like, wait a minute, what? Because I just talked to my friend's little brother and it was at 1,000. And now you're telling me a few months later it's at 3,000. And at this point, after hearing about it for years, from it being under a couple hundred to then trading in the thousands to now being at 3,000, I was like, you know what, maybe I was wrong here. Maybe I actually need to take a look at what this thing is. And I jumped into the rabbit hole. That was in 2017 when Bitcoin was at 3.2K-ish. Within a week, I had bought my first Bitcoin at 3.4K and happened to get in just in time for that massive run that we saw towards the end of the year. Ended up selling that Bitcoin at 11K. Why? Because RSI was overbought, quote unquote overbought. And from the little that I learned about technical analysis at the time, that told me that it was time to sell. And so I sold at 11K just for it to run up to 20K a week later. And so that was my first experience with Bitcoin. And after that, I told myself, I was kicking myself like most would, because I was like, why did I sell at 11K? It just pumped up to 20. I missed out on X amount of gains. And I was like, you know what? I need to figure out what I did wrong here. Why did I think that it was the right time to sell? Where did I go wrong? Let me try and understand what mistake I made. And that's when I jumped into the rabbit hole of technical analysis to another level. Like I started spending hours and hours of my day trying to understand this. And then, the rest is history. And now here we are almost 10 years later, and I'm very much involved with the space. And I've obviously learned a lot more in the nearly 10 years that I've been here. And it all stemmed from that one mistake and me saying I'm never going to make that kind of mistake again. So here we are.
That's awesome, man. That's an awesome background. Yeah, I mean, for me, I think you're one of the first accounts I ever followed in crypto Twitter when I got into it in early 2021. So I'm comparatively far more junior to you, but yeah, have been looking up to you for a long time. So always a pleasure to talk charts with you. Speaking of which, maybe we can get into the charts. I want to quickly ask you, yeah, this is my chart here. I mean, I've been looking at BTC lately. We're getting this bounce off the lows here, which I'm unsurprised about, but kind of as I mentioned to Craig here, we're still in this kind of high time frame downtrend. This is still a kind of a pullback until proven otherwise. Just curious to get your thoughts. What are you looking for in the BTC chart at the moment? What has your attention?
Yeah, so it's a great example. I think another example of how, when we talk about trending trends, uptrends, downtrends, we have to be really clear about what time frame we're talking about, because as we know, you can have uptrends and downtrends on different time frames. And as you stated correctly, I think in the last segment, we've technically been like in a higher time frame downtrend since October. So obviously Bitcoin peaked at around 126K, and we've been making lower highs and lower lows since. The first area of interest that I've been watching on the higher time frames, the first level, actually, I should say, that was important to me was 74K. And so obviously those that have been following me for a while know that I put a lot of emphasis on that level, essentially saying that if we break 74K, that's our first indication that this is a major shift in structure. And so now that 74K has been broken, the next area of interest that I think is relevant is the region, the entire kind of consolidation between around 50K to around 75K that took place in 2024 between March and October-ish. So that was about an 8-month long consolidation period that we had on Bitcoin between, again, around 50K to around 70K. And we've now hit that zone. And so I know you're probably very familiar with supply and demand. I know you've talked about it as well. You can view this sort of 8-month consolidation in this region as like a pivotal point in the structure of Bitcoin, because there's an 8-month long sideways consolidation from which we then broke to the upside and went on to essentially double. And so now we're back in that zone, and the expectation is that we would expect buyers to step in here. Now, obviously, we put in a big wick at around 59K. We then pumped up to around 82K, which is that parallel channel that you have in your chart. And now we've bled back down to those local lows at around 60K. But the key is that we're holding still in this general region of 50K to 75K. So as long as we chop about in this region, to me, I believe that we're forming what is essentially like a larger base here. Now, we don't have confirmation of that, and we won't get confirmation until we start breaking back above 80, 90K. So if you're going to wait for confirmation, you're going to have to wait quite a bit, because like we just saw a few months ago, we pushed up to 80K, rejected, and came all the way back down. So it's not going to be necessarily easy to get confirmation of what's happening here. It's going to take some time. But I do believe that as long as we hold above 50K, what we are building is essentially a base, kind of like that green squiggle that you have there, a base before we revert back to the upside. And there's a lot of reasons why I say this, but one of them is if you look at like historical data, and I've talked a little bit about this on Twitter as well, but if you look at historical data, at the moment, the largest amount of Bitcoin supply that has ever been held in long-term holders' hands, or that level is the highest it has ever been. It's at like 80% of all Bitcoin in existence is currently being held by wallets that tend to hold long-term. And so what this essentially means is that we talk about like, supply and demand and accumulation and distribution. What this essentially means is that a massive chunk of the Bitcoin that exists is currently being held in a few wallets' hands, and they've been accumulating, and that level has been growing to reach a point now where it's at almost 80%. And again, the highest has ever been in history. So the whole idea is that if this excess supply that is being sold at these levels is being bought by people that aren't interested in selling, which we historically call long-term holders, then at some point, either they're going to stop buying or the sellers are going to stop selling, and that'll determine which direction we go in. But historically, these long-term holders that are accumulating aren't that sensitive to price moving against them. Typically, if price goes lower, they simply buy more until they absorb all the excess supply, and then we see a reversal on Bitcoin. And so with such a large amount already amassed, unless sellers keep pounding the sell button and manage to essentially push us past the ability for these guys to absorb, I think that we're going to see a base out here and then reverse. And those long-term holders typically keep buying, literally just keep buying until we reverse. And they typically start selling once price is moving up aggressively again. Otherwise, you don't see them typically selling as we draw down, unless you get a situation like Luna or 3AC where you get forced sellers that have no choice but to dump. Typically, that's not what we see. That's sort of you can call it a black swan, I guess, the FTX collapse, 3AC Luna. But that's not the norm. That's the exception to the rule.
So what I'm gathering from this is that you're probably thinking that the bottom is either in or close to being in. Would that be fair to say?
Exactly. Yep.
Yeah, I mean, that's an interesting idea because, you're effectively talking about this high time frame consolidation that we had in 2024, which I actually mentioned on the last segment. And you're basically saying that this is going to act as that's the base that led to the expansion. So now we're kind of retesting it, and this is where you would expect some kind of market reaction, right?
Exactly.
Yeah, I really like that idea. That's something that I speak about a lot. How, I think a lot of supply and demand traders get caught up in this idea of like, oh, what was the last down candle that led to the up move that broke the structure? And they kind of forget the underlying principle there is you're actually just trying to find where was the consolidation that led to the expansion. And if we retest that consolidation, is the market likely to give a reaction? I think that's kind of exactly what you're looking for here, if I'm right.
Exactly. Yeah. So you made a really good point. People look for that candle, right? That candle that led to the up move. But that candle will look different on an hourly time frame, it'll look different on a daily time frame, it'll look different on a weekly time frame, it'll look different on a monthly time frame. So really what you're trying to identify when you look for that quote unquote candle is you're looking for that consolidation range, right? Which on different time frames can be 1 candle or 10 candles or 100 candles. But ultimately you're looking for a long period of consolidation, which creates that order block on higher or lower time frames from which we expanded from. So yeah, you pretty much nailed it on the head there.
You're talking my language, man. Yeah, I love that. So, I mean, with that in mind, like what has your altcoin exposure looked like this cycle? Let's say going back over the last 6 to 12 months. Are you one of these people who kind of started de-risking in October? Have you been waiting for the market to give you certain signs in order to go from risk off to risk on? Or how has that looked like for you?
Yeah, sure. So this goes back to like what I've been saying since honestly like 2018, 2019, which was back when Bitcoin was at 3K. I talked about this secular bull cycle of Bitcoin where ultimately we're headed to 100K plus over a number of years. And Bitcoin typically leads out of bear markets into bull markets, and altcoins typically follow after that. And I used Bitcoin dominance at the time as like one of my key metrics. Dominance was at like 38 to 40% back in 2021. And so the idea was that when Bitcoin goes on this monster run that we're expecting to 100K plus, obviously Bitcoin dominance should be expected to rise. Obviously, Bitcoin tends to lead. Obviously, don't expect altcoin outperformance that early in the cycle. And so I basically said, expect Bitcoin dominance to rise to like, at that time I said minimum 50%. Until we hit 50% Bitcoin dominance, don't expect your alts to do anything crazy. After we hit 50% Bitcoin dominance, we can see where we're at and take it from there. Fast forward a couple of years, in around 2023, we hit close to 2024, we hit 50% Bitcoin dominance. For reasons at the time, we had not yet completed the move to 100K. We hadn't quite hit 100K yet. So I said, look, we've hit 50% dominance. We're not at 100K yet. Bitcoin still looks like it has room to move up. So I'm expecting us to climb higher on Bitcoin dominance. I'm looking at around 60% now before you can expect alts to outperform. Fast forward even further, we hit 60% dominance. Eventually, Bitcoin breaks 100K. And so for the first time in a long time, by the time Bitcoin broke 100K, fully exited all my Bitcoin that I'd been accumulating since 3K in 2018, since 6K after that, since 15K in the recent correction that we had like late 2024 or whatever it was, fully exited Bitcoin as it approached 100K. And the logic behind that was that Bitcoin dominance has now reached 50 to 60%. Bitcoin has now broken 100K. At this point, yes, we can go higher, but upside to me in my eyes, based on what I expected from this cycle, is relatively limited. Maybe Bitcoin hits 200K. Maybe Bitcoin hits 250K. That still only yields a 2x or a 2.5x from 100K. Versus an altcoin bull market, if that's what's headed next, we'd expect alts to do multiples of that, 5K, 10K, 5X, 10X, 15X. So the risk reward of Bitcoin at 60K, 70K, 80K, or 100K is very different from the risk reward of Bitcoin at 5K or at 10K or at 15K when it's actively accumulating. And so since Bitcoin has now approached 100K, fully out of Bitcoin and fully into alts, not because I don't think Bitcoin can't head higher, I'm sure it will eventually, but more so because I think that the risk to reward at these levels is not the same as it was years ago when it was trading under 20K. And at this point, I think the better bet is on altcoins that are now basically at where Bitcoin was at, when Bitcoin was trading at 3K or 6K or even 15K. Many alts are now down 80 to 90% from their highs. And just as that was the best time to buy Bitcoin, I think that's now the best time to buy alts. So my attention is fully on alts for the most part. My exposure is fully there. I am paying attention to Bitcoin just because it gives us an idea of when we might see those alts move. But in terms of my actual holdings and my exposure, fully on altcoins.
That's awesome, man. Yeah, I mean, you mentioned there certain altcoins being down 89%, 80, 90%. And I think, yeah, it's one of those things where at a certain point you see these alts that have been downtrending, 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 and then they start consolidating at the lows. And it's almost like people kind of joke and they say, oh, the coin must have run out of sellers. But what you're actually seeing there is the market starts transitioning from a potential downtrend to a potential uptrend, right? You see the structure starts to shift, right? You see seller control starts to loosen. Maybe you see an upside move that kind of leaves some kind of inefficiency behind. I think that's the time where you need to be ready to execute. And I shared a chart here, if I can just look at it. Yeah, so one of the charts that I've been looking at pretty closely over the last few live streams actually is the LIT chart, and this is a beautiful example of what I'm talking about. We had this downtrending price action, this consolidation at the lows, and then we had this pop back at the start of May or mid-May, and this was kind of your indication that maybe it's time to start paying attention, right? Because after this consolidation at the lows, now you have this upside move that breaks structure, right? This is your signal to start paying attention, right? And we're seeing that on a lot of coins, one of which is XPL, and this is a coin that I've been trying to get people to pay attention to because I think it looks exactly like LIT, right? Where it's after this huge downtrend where it's like down like 92% or 89% or something like that. It's now starting to consolidate at the lows. So this is one of those ones where if it starts to show strength and starts to show a certain amount of buyer interest, I think you need to be prepared to execute because the upside on these coins is just incredibly, it's so asymmetric, right? Because these coins are down like 80, 90% from their all-time high. Even a move to retrace, 30% of that downside move is going to give you like a 3x or a 2x, right? It's crazy.
Yep. Absolutely. Yeah, you hit the nail on the head. And yeah, I'm looking at XPL right now and yeah, there's so many charts that look like this right now, right? And the difference between a chart being dead and one being alive, because dead charts will look like this too, but the difference is that typically an alt that's going to make a recovery. Well, I should put it this way, because even some altcoins that have zero fundamental value will rise when the market shifts, right? Like we've heard the phrase, a rising tide lifts all boats, and that's 100% true. A rising tide typically lifts all, if not most boats, right? Whether they have fundamental value or not. But the altcoins that do actually have fundamental value have a reason to recover and rise. And the alts that don't have any fundamental value may still rise, but many of them may not, right? And so I think that's also a big important kind of thing to nail down is when we talk about, an alt season or alts moving off of their lows, I at least for me, I'm not saying that every single altcoin in the entire market is gonna have a massive run because that's just not realistic. We have now hundreds of thousands probably coins in the market, and I would say 85, 90% of them do absolutely nothing and should not really be existing at this point in time. But for the 5 or 10% that actually have some sort of value or attention at least, those, like you said, I think will do multiples off the lows. Even if they don't make it to prior all-time highs, will still give you, like you said, a 3 to 4x, in a number of weeks even. And so you compare that to where Bitcoin is at 60K, it's a bit better of a value than when it was at 100K, I'll say that. But even when it was like at 100K or even at 60K, if you think it's going to go to 250 from here, that's a 4x. Like you said, some of these altcoins that are down 80 to 90%, they'll put a 4x in like 5 weeks, right? When the time is right. So if you think that Bitcoin can go back to 250K, great. Yeah. But if it takes 12 months and an altcoin does that in 4 weeks, then clearly the risk reward still favors altcoins, even if Bitcoin is going to go back to 250K. And I think that's the bottom line is that whether the Bitcoin top is in or not, you have to keep in mind potential upside versus potential downside and the time horizon. And so for altcoins right now, even though it's hard to know when they're going to reverse, if and when they do, it should be pretty aggressive and pretty fast. And if you're not already thinking about positioning, then it's very reasonable to say that you might miss that initial 3, 4, 5x off the bottom. And if it is headed much higher, that initial 3, 4, 5x is very significant. You take a look at like ZEC, for example, Zcash, which is now pretty close to prior all-time highs, right? And you look at it back when it was at like $20, I think, a couple of years ago. And you look at the chart and you see how long it was down there for. And you that's what most charts look like right now. They look like an endless bleed with, like no sign of life back when it was trading under $20. And look at where it's at today, right? And so if you got at the bottom at under $20 and now it's trading at, like let's say 800, you're up 40x. If you got at the bottom at $100 because you didn't catch that initial 4 or 5x off the lows, then you're not up 40x, you're up 8x. And so that initial 3, 4, 5x off the bottom makes such a big difference if you're talking about a long-term investment that it's worth paying attention to, even if the coin doesn't seem like it's quote unquote alive right now, because that initial 3, 4, 5x off the bottom is what leads you to get those 40, 50, 60, 70x's down the road, when most are then at that point only able to squeeze out a 3, a 4, or a 5x.
Yeah, the Zcash chart is insane, especially given what we saw recently with the quote unquote exploit, or the potential exploit that no one was really quite sure about. But yeah, absolutely bonkers chart. I remember looking at this thing last year and thinking, why would anyone buy Zcash when XMR, when Monero exists? But I was proven pretty wrong on that thesis very quickly. But yeah, I mean, the point you're making there is effectively it's to do with capital allocation, right? And I think that's a lesson that many of us had to learn the hard way this cycle, because you think about 2021 and how many bad habits it was easy to pick up when it came to altcoin trading, because effectively there was just so much capital coming into crypto, and there was so much hype around the altcoin market. And I guess the ticker dilution wasn't quite as bad that cycle. So you really had just random altcoins would just do a 2x on a Monday and like another 2x on a Thursday. I remember if you were in an altcoin that only ran like 15% when everything else was running, you'd be like, oh man, I picked the wrong one. You know what I mean?
Yeah.
I remember investing in just the craziest dog shit like back in 2021, and I was top blasting awful altcoins that no one wanted, and I was still making money. So I think it's one of those things where this capital has definitely tested the mettle of a lot of guys who maybe learned how to trade and learned how to allocate their capital in 2021, and has effectively proven that you need to be a lot more selective about where you put your capital and the coins that you pay attention to in this market. One such coin I want to talk about, and I know that you have a YouTube video coming on this soon, so I don't want to spoil that too much, because I'm sure you have some very interesting takes on Ethereum to come in that one. But I just want to get maybe a quick teaser, because for me, like, Ethereum kind of satisfies the criteria that we're talking about here as well. It's, from the cycle high, it's down. I mean, at one point it was down 69, 70%. That was just a couple of weeks ago. It's now kind of bouncing from this kind of range low support is what I'm calling it. You look at the daily and it's kind of, I would call this maybe accumulation at the lows. If we can start breaking structure to the upside, I think, I really like it. I think the people calling for the death of Ethereum are probably a little bit premature. What's your take on that?
Yeah, so pretty much in line with exactly what you just said. Yeah, I do have a YouTube video, probably will be releasing tomorrow, that's going to break down the thesis in detail. It's about an hour long, so you can imagine how much depth I go into it. Obviously, we don't have that much time on the show today, so I'll give you a very quick, brief gist of the idea, but you've pretty much got the right idea. What we have here on Ethereum, as can be seen from your chart, is like a multi-year range. And it's very obvious we can call it that because we've had multiple visits of the highs and multiple visits of the lows, one after the other over a period of 5 years or so. And so this is the definition of ranging price action. Now, it's crazy to say that because the variance within this range is massive. We're talking about a range low of about $1,500 to a range high of about 5,000. And that, to call that a range, is pretty crazy. But again, this is crypto, and this is one of the most volatile markets in the world. And so this type of volatility is pretty normal to see in crypto. And so this is, like you said, essentially a 5-year long consolidation. Again, similar to like the consolidation we had on Bitcoin from 50 to 80K, that lasted 8 months. That led to a 2x expansion. This consolidation has lasted now 5 years. And so I think it's going to lead to a significantly greater expansion. And we saw the same thing on XRP not too long ago. XRP had been consolidating in like a tight, constricted consolidation for like 7 years, and then it went from 50 cents to $3, new all-time highs in like, I think it was 4 weeks or 4 weeks or 8 weeks, I think. And so now it's pulling back, obviously. But the point that I'm trying to make is that that massive candle that you see on XRP followed, years of consolidation, very, very similar to what we're now seeing on Ethereum. And fundamentally, fundamentally, not much has changed. If you look at the metrics and the data from Ethereum back in 2020 or 2017, when it had its first major run, usage has increased. Like all the network metrics look solid. And so the idea that Ethereum is somehow dead now simply because it's been consolidating for 5 years, I think is a big, big mistake, because people get impatient with the sideways price action. They see that it's not running like Bitcoin. But at the end of the day, and I've been saying this since 2019, altcoins, which Ethereum is one of them, typically don't run until after Bitcoin has had its major cycle or its major run. And so if you're expecting Ethereum to start running, and hitting 10K or 20K when Bitcoin hadn't even finished its full move to 100K plus, I think that's where the disconnect is. People expected Ethereum to move along with Bitcoin, and considering we're at range lows once again. The last time we were at range lows about a year ago, we went to new all-time highs in record time, I think in the fastest amount of time that we've done in this range. And now we're back at the exact same level. People are again saying Ethereum is dead once again, just like they did almost a year ago. And if that isn't proof of how this can be so completely wrong, the fact that we literally mimicked this exact scenario a year ago and it literally went to new all-time highs, I don't know what else to tell those people. Like, that should be proof to you that Ethereum, just because the price is back down to range lows, doesn't mean it's dead. You have to have more than that to convince yourself if we literally did this a year ago and the result was new all-time highs in a record amount of time, right? So again, I go into this in much more depth in the YouTube video, but I break it down from 3 different perspectives to explain why I think we are on the precipice of a massive, massive run on Ethereum.
I love that. I love that. And everyone watching this, please go follow Crudele on YouTube and look forward to that YouTube video. I know I will. Another alt that I want to ask for your take on, and this is probably one that's close to your heart. This is like the altcoin that I know you for. This is the altcoin that I always associate you with. It's Curve. It's CRV. And I'm curious to know what is the updated, what is the July 2026 take on Curve from Crudele Crypto?
Yeah, so if you go to the Curve chart, you'll see again, it's one of those charts that looks like most of the charts in the space right now. XPL looks very similar. You have that massive, massive pump. You have that long drawdown. People are calling it dead once again. If you go compare this chart to the Zcash chart, Zcash looked exactly like this at 20 bucks before it ran to 800, and now everyone's saying it's back. And so the idea is that if 99% of the charts in this space look exactly like CRV does now, it doesn't necessarily mean the coin is dead, right? How do you know if a coin is dead? How do you know if it's not going to recover? Versus how do you separate the ones like Zcash, which had that same long bleed, consolidated for a number of years, and actually an even tighter range than CRV did at the lows, and then spiked up 40x in a number of months? How do you know the difference? You have to look at the fundamentals, right? So that's what separates the coins that look like CRV and that may not recover from the coins that look like CRV and I think will recover and go on to make new all-time highs. What are the fundamentals behind CRV? Again, just for those who have no idea whatsoever, the idea is that CRV is a token that correlates to the most efficient stablecoin index in the entire space, one that has existed since 2021, one that existed and survived through the Luna collapse, through the C3AC collapse, through the Tether FUD, through everything that has been thrown at the market since 2021. It has survived and thrived, and to this day continues to do its job effectively and efficiently and produce fees for those that hold the token. In addition to this, people always talk about CRV inflation being crazy high and why that's the reason the token hasn't risen. CRV inflation is literally modeled after Bitcoin inflation. I don't think people realize this. Some of you who were here in the early days may remember a time when there was a website called the Bitcoin Faucet, where you could literally click a button and get free Bitcoin. Why? Because Bitcoin inflation at the time was incredibly high. Why? Because it was a new token. Bitcoin, 4 years into its existence, like CRV is now, was in 2013 worth a couple $100 at most. Why? Because inflation was crazy high at the time. And so maybe that's why price was sitting at 100 or 200 bucks. Look at Bitcoin today. Again, CRV inflation is modeled after Bitcoin's inflation, except it's smoothed a little bit more. So instead of these massive drops in inflation every 4 years, we get reduced inflation by 15% every year. On top of that, over 40% of the entire circulating supply of CRV is locked away forever. So not only does it have the same token emissions as Bitcoin, but unlike Bitcoin, 40% of that supply that does exist is not accessible to the market. And then finally, it is a real functioning product. Again, it's the most efficient stable swap coin DEX in the space. And it produces real yield and real fees that go to CRV lockers. And so this does have fundamental value. Unlike other coins that look like this chart but don't have fundamental value, CRV most definitely does. Then you consider the fact that stablecoin growth has been incredible the last couple of years and is only expected to continue. I've heard quotes from people saying they expect stablecoins to hit multi-trillion-dollar market caps in the future. So if this entire segment of stablecoins is expected to be a massive, massive booming success, and if the best place, the most efficient place to swap high amounts of stablecoins is Curve DEX, and if Curve DEX literally takes those revenues and pays them out to token holders, these are all fundamental values that make me think that this is one of the charts that is not just going to fade away and die, but it's going to be like Zcash, where you have this long period of accumulation. You have people like me that are actively buying it because you recognize its potential. You have other people that are actively selling it because they fail to recognize the potential. And then you get something like Zcash down the road where it goes up 40x and makes new all-time highs.
Yeah, for sure. I know that a coin that's related, I think it's CVX, right? Isn't that the ticker?
Yeah, correct. Yep.
Yeah. Do you have a CVX chart that you could share with us?
I do, and to no surprise, it looks almost identical to the CRV chart. I'll go to the CVX chart that has the most amount of price history, which is a little tricky to find because typically when you go to CVX on TradingView, you'll get stuck with a chart that has like half the price history. I think like the one you're looking at now doesn't have all the price history, but
if you have one, maybe that would be ideal.
Yeah, I should have it. I have it here somewhere here. Let me see. Okay. So yeah, I've pulled up the chart with the full price history here. So can you see my screen?
Absolutely, yeah.
Okay, perfect. So this is CRV and this is the complete price history. And I'll go to log scale just to make it a little bit more digestible. But you basically have here the creation of CRV in 2021, CVX in 2021, shortly after CRV launched. And you can see here it moved down to about $1.80 and then went on to move up to $60. And today it's bled back down. So like many other charts, you have that sort of endless bleed since 2021. People think that it's never going to recover. But again, the fundamentals behind CVX are significant. And I don't want to get too much into that right now, but long story short, if you do hold CVX, you have the ability to lock those tokens for just 4 months, not 4 years, just 4 months. And if you choose to do that, you get a portion of protocol revenue and emissions. CVX, unlike CRV, is nearly fully emitted. So we're not talking about APR from inflation. We're talking about APR from other aspects. And that APR is anywhere between like 10 to 30% at any given time. And that APR has been paid out now since almost inception. We're talking about almost 4 years, every 2 weeks without fail. So I've collected more residual income from CVX than any other asset in this entire space that I've been holding. That residual income is already paid for my entire stack of CVX. The entire cost basis has been recovered. And so that APR is still being paid out every 2 weeks and has been. And so that is, again, fundamental value. What can you get by holding CVX? Unlike a meme coin, you can actually get a paycheck every 2 weeks. And again, where does this paycheck come from? That comes from the fact that CVX controls a large share of CRV and therefore is entitled to a large chunk of the current CRV emissions. So there's a lot to that. I've made many articles on X and Twitter that explain the whole process from A to Z. If you're curious, feel free to check those out. It goes into much more depth. But again, CVX is like CRV in that it does have fundamental value. It does give you a ticket to actual revenue every 2 weeks. And unlike CRV, CVX emissions are almost completely finished, which means unlike CRV, which again follows the Bitcoin emission schedule, for CVX, there's almost no emissions left, which means supply is actually even more constricted than CRV's supply, which means when things really do turn, I expect CVX to move up even more aggressively because there's a very low float, there's no more emissions, and it's been consolidating, as you can see, for almost 4 years now.
That's awesome, man. Just going through some YouTube comments here. We have Radmarad saying, please let Credible Crypto know that I am a huge fan of his from today. We have Candle Handlers saying, really love this show, really love the crypto closeout. So many gold nuggets in the analysis and the commentary. We have Jay saying, Cred is a legend. Thanks for having him on. And What the Fox saying, yo, Credible is awesome. Thanks for bringing him on the show. Lots of love for you in the chat.
I appreciate that. I like to hear that. Thank you.
I think everyone likes to hear that. Yeah. So as we kind of come to the last maybe 10 minutes here, I would like to, I mean, if you're happy to stay on, I would love to ask you one or two more questions.
Yeah, I have time, so I'm happy to answer whatever questions you have.
Great, awesome. I appreciate that. I guess like one question for me, and this is a question I ask many of my guests that come on, is what has been the biggest challenge for you this cycle compared to previous cycles? And it can be anything. It can be trading related. It can be more to do with the coins themselves. It can be to do with the market participants. It can be to do with sentiment, whatever. What's been your biggest challenge this cycle?
Yeah, so I think a big challenge is just adapting to changes in the market that we've seen. There's been certain situations where what I'd normally come to expect from all my years of experience in this space can get proven wrong at times, or the data that we're looking at that we're so used to relying on because it's been so consistent and so accurate, all of a sudden changes up on us and doesn't give us the signal or the result that we're expecting. And so, I mean, a good example of that is on Bitcoin back here in that, that 8-month range in 2024 when it was trading between in March, when it was trading between the highs of 73K and the lows of 49K, right? We chopped around there for 8 months in that range. And during that chop, I was performing fantastically with my trading because I knew that we were locked in this range. We weren't seeing what we like to call impulsive price action. And so trading the range was yielding really good results for me. And I remember at the time I was making comments on like the lower time price action. So we had a move to 73K, we came down to 60K, popped up to 73K again. And I was using some data and metrics that I found very useful up until this point to basically try and identify whether this pump up was going to result in like expansion from this range or whether it was a fake out that was just going to send us back down. And so for like 3 or 4 of these local tops in this range, I was able to look at that data and it was giving me the exact same signal that, hey, this move up is a fake out, don't trust it. And so I was locally bearish like 3 or 4 times at these local tops almost every time. And almost every single time I was right. We swung down to 53K, pumped back up to 69K, 70K once again, looking at the same exact data. It's telling me the same exact thing that we're likely to come now back down. This was likely a fake out. This is likely not the time for new all-time highs. And so once again, I faded that move. Then we came back down, dropped all the way down to 49K. Once again, popped up, once again, got the signal, once again was short time frame bearish, came back down. Now, keep in mind, in broader context, this idea was that whatever this chop was at around 60K, it doesn't change the fact that we're going to 100K plus, right? That idea that I've had since 2019 had not changed. We had what I like to call 3 waves out of our 5. We were missing this final leg to the upside. We were missing that leg to 100K. So there was no doubt in my mind that that leg to 100K is coming. But what I don't know is when it's going to start, right? That's the hard thing. Because look, we chopped here for 8 or 9 months in a range. We had so many moves to the upside. Each one was faded. We came back down. How do we know when we're finally going to break out of this structure, right? Up until this point, back here when we were at 65K for the 5th time in this range, the signals that I was getting from this data was telling me fade it, fade it, fade it, fade it. We made a low here at 52K. We pumped back up to 66K. I'm getting the same signal for the 7th or 8th time now. Fade it, right? So what do? I fade it. I think this is, in terms of trading, I think this is just another fake out. We're going to go back lower. This possibly come back down to wick to 52K, possibly wick below 49K. Again, that doesn't change the fact that we're headed to 100K on the higher time frames. But as a shorter term trader, it may mean that you have to brace yourself for another move back down to the lows. What happened then? We didn't get a move back down to lows. We continued to grind up, and then we got our 5th leg to 100K plus, right? So I was caught off guard here. Why? Because the data that I looked at so many times that gave me so many good signals finally did not pan out the way I expected. And so what I then took from that is, okay, this stuff that I've been looking at that has worked so many times, something is changing. What was changing? What made us move up like this in a way that tricked me, fooled me at least? And if you look at the data, what we were seeing then at the time was we were seeing essentially price being walked up instead of buyers aggressively hitting the bid and pushing price up with market buys. What we were seeing was some entity was essentially lifting limit buys under price and absorbing sell pressure and just grinding price up. And that's why we got this sort of weird choppy grind up that it then went aggressively because a bunch of shorts got blown out, right? And so at that time, I think Michael Saylor was probably accumulating very aggressively, and it seems like that method of accumulation wasn't so much forcing price up with aggressive buys, but rather absorbing any excess supply until price was forced to move up. And so that change in these larger entities stepping into the game and then maybe buying in a different way or having a different approach to how they're accumulating Bitcoin was something that was new, that I had seen for the first time, and that caused me to have to change my outlook and to change the way I approach the market. So following that movement, following that incident, I now knew that, okay, this data and metrics that I'm looking at that has been correct 8 out of 8 times has finally failed, and no longer can I necessarily rely on those same metrics to come to my decisions. Now I have to consider other things. Now I have to look at other data. Now I have to make changes to my approach. And so kind of adjusting with the way the market has changed over the last few years due to like ETFs, due to people like Michael Saylor, due to all these new variables and factors coming in, that has been the biggest difficulty. It was just having to know that what worked 5 years ago may not work today anymore. We're talking about a whole new market with a whole new set of players, and you have to constantly adapt to those changes as they come along. And you're going to make mistakes along the way, because at the end of the day, all you have to go on is your experience. And all of a sudden, when your experience tells you to do something which gets proven wrong, now you're questioning moving forward. Can I rely on what I did in the past? Can I rely on this method that I used in the past? Or is this one of those instances where what I know to generally be true is going to be proved wrong? And battling with that psychology in your mind is probably the toughest thing I've had to deal with in the last few years.
Yeah, that was just a great response to that question. And I think you've hit the nail on the head there, right? Because I don't know how many great traders I've seen from previous cycles, from guys who killed it in 2021, who have just seemingly failed to adapt this cycle and kind of failed to change their trading methodology or the way that they interact with the markets in order to match what the markets are giving them, right? They're trying to trade this ideal market, this market that maybe doesn't exist anymore, this market that, as you say, has been fundamentally altered by Saylor, by ETFs, by DATs, by treasury companies. And then they get frustrated because, you know, maybe they can't make the same amount of money that they were making in 2021. And that results in, you know, kind of a negative spiral or some kind of compounding error type situation. But yeah, you've absolutely nailed it there. It is adaptability. The last question I would like to ask you, and this is something that you just touched on there with Saylor. We have guys asking in the chat, what is Credible's opinion on Saylor? And I would love to know, because obviously we saw this change, this announcement was a week ago from Strategy saying that they were now going to become a more traditional financial vehicle that not only buys BTC but also sells it when it makes sense to do so, rather than diluting their shares. Do you have a hot take on Michael Saylor and kind of what he means for the BTC ecosystem?
Yeah, absolutely. So I've been saying this for some time now as well. Like I think a couple of years ago, I might have mentioned it on my Twitter. And now I think people are a lot more open to the idea. But I said a long time ago that in the next secular bear market, you know, whenever that may be, I do think that Michael Saylor's approach is going to get him in some hot water. And I have a feeling that if he continues in the way that he's going right now, you know, even if he survives this current pullback, which I think is reasonable to expect, I don't think he's going to blow up right now. Even if he survives this, his approach for the last number of years has essentially been to just buy Bitcoin at whatever price it may be at. And when Bitcoin continues to rise, that's great. Everything works out fine. But as we've now seen, when Bitcoin doesn't continue to rise for an extended period of time, and it does start to turn and trend down, he can find himself in a position where he may need to sell some Bitcoin. And I think his average cost now is somewhere in the 70Ks, if I'm not mistaken. There was a time when his average cost was like 10K, 20K, whatever it may have been. The higher that Bitcoin climbs and the more that he keeps aggressively buying at higher and higher price levels, the more risk there is for this thing to completely implode down the road if he continues on this path. So let's just say that he survives the current downtrend, which I think he will. I don't think this is the end of Michael Saylor or MicroStrategy. I do think that he will survive this, and I do think that price will likely rise again. But let's take a scenario in which Bitcoin continues to climb back above prior all-time highs, and let's say it goes to 150K, or let's say it goes to 200K. If MicroStrategy continues his approach of buying at every single price level, irregardless of price, his average cost may no longer be 70 or 80K. Maybe it hits 100K. Maybe it hits 120K. Maybe it hits 150K. If that move up on Bitcoin eventually we have a secular top, something like what we saw during the dot-com bust for the SPX or what we saw in 2008 with the housing market crash. If we see that sort of a correction on Bitcoin, and again, for context, both of those corrections in the stock market, or that correction in the stock market, took 13 years to make new all-time highs from. So if we see something like that on Bitcoin where it hits 150K, hits 200K, goes parabolic, and then crashes and doesn't return to those levels for 10, 13 years or something crazy like that, there's a decent chance that Michael Saylor is going to have to start selling his Bitcoin once again if price continues to bleed. And that is sort of, we almost hit sort of a spiral this time, but he was able to alleviate concerns. And I talked about this again in the YouTube video I'm releasing tomorrow. He was able to alleviate concerns and kind of put people at ease. I think he has now a runway of 12 to 15 months, and then he's allowed himself to sell up to 1.25 billion worth of Bitcoin to extend that to 25 months to pay these dividends, and that's kind of alleviated concerns. But in a scenario where he keeps buying as we go up and then we get a secular bear market and he's forced to sell, that can quickly unwind the entire structure if he's not careful. And the problem is that, according to Michael Saylor in his own interviews, he has literally been recorded saying no more bear markets. He said that bear markets will no longer be a thing in Bitcoin. And he's also said that he expects Bitcoin to hit, I think, something crazy like $13 million by like 2030 or 2040 or something, right? He had that big presentation. So if you're dealing with a guy who thinks that there will be no more secular bear markets, if you're dealing with that kind of a person who's essentially not planning for a secular bear market because he thinks it's not possible, then you're opening yourself up to a situation where things can get really, really nasty. So I think he's fine for now. But I think with his particular perspective on Bitcoin and where he thinks the market is headed, I think he can be in hot water years down the road. And the most significant likely time for that whole thing to go to, excuse my French, go to shit, it would be during a secular bear market, something that we haven't seen before, something where Bitcoin is now down for 5 to 10 years. Again, for Bitcoin's only been alive since 2009, 2010. So it's only been like 15, 16 years. And again, in traditional markets, you may be familiar with the idea of those like 16-year secular bull cycles, right? Where you have smaller cycles than a larger cycle, and then you get a massive correction after a couple of decades. So we saw that in the SPX multiple times, the Great Depression, the housing crisis. You get 10, 20 years of upward price action over time with dips in between, and then you get some massive wipeout, right? For Bitcoin, I believe personally, we haven't yet seen that massive wipeout. It's only been 15, 16 years of Bitcoin's existence. And I think Bitcoin, like every other market, will have a massive wipeout at some point. We saw it on silver too. Silver 40 years ago topped, bled for 40 freaking years, and then finally now has made new all-time highs. But every single market, whether it's stocks, whether it's commodities, you're going to see boom and bust cycles, and Bitcoin is no different. And so if and when we get that secular bear market, I think it's an inevitability at some point. I think that's when we have to be worried about Michael Saylor and his strategy.
Yeah, 4% of supply, systemic risk, no matter how you slice it. But that is a great way to close out the show. Credible Crypto, thank you so much for joining me. Always a pleasure to speak to you. Just, amazing insights, and very generous of you to share 45 minutes of your time. Come on the show with us today. Thank you very much. Where can we find you on social media?
You can find me on X at x.com/crediblecrypto. I'm also on YouTube at youtube.com/crediblecrypto. And thanks for having me. It was a great chat. I really enjoyed it. And yeah, I appreciate you for having me come on.
No worries at all, man. Appreciate you, and everyone go follow Credible on X and on YouTube. As he mentioned, he has an Ethereum video dropping tomorrow, so notifications on for that. But we are going to wrap things up, guys. Thank you very much for joining us on the Crypto Closeout, powered by Kraken Pro and NinjaTrader. We will be back next week for another edition of the show. Until then, stay safe, try not to get liquidated, and we'll see you next time. Bye-bye.